Well, not only have we seen overnight that downward slide for the local unit, but we've also seen bullion under pressure. Of course, that belief that perhaps the Fed is more inclined to an earlier than expected tapering off of its QE program, one catalyst. Good economic data driving that belief, as we did see with the Case-Shiller house price index setting up consumer confidence as well, and put a fresh bit into the greenback. Let's talk bullion now with Jordan Eliseo from our Sydney CBD studio from ABC Bullion. Jordan, welcome to you. We have seen certainly a cessation of that savage selling, but what's your current reading on the direction for gold?
I think the gold market's it's a little topsy-turvy right now. People that are bullish in the long term, like myself, still do see potential downside in the short term. Obviously, the bears are still in control of the market, so there's no clear direction with precious metal prices right now, with the Fed talking of tapering but also promising to continue stimulus as long as is necessary.
So what would keep it above 1400?
I think some poorer or more disappointing economic data would imply that the Fed will keep printing. Potential volatility in Japan could also see people bidding up precious metals. So there's a few factors that can push prices up in the short term, and particularly over the long term. I think we will see continued QE around the world, and that'll keep prices strong over the next few years.
How important a buffer is this fresh wave of central bank buying that we can look as, I suppose, as a counteractive force for any US dollar strength?
Yeah, that's a great point, Carson. Basically, I think if you look at emerging market central banks right now, they hold a very small portion of their forex reserves in physical bullion. That's obviously something they've started remedying over the last couple of years by buying, and it's a trend that I think will be in place for many, many years.
Yeah, the World Gold Council saying that they actually account for about 11% of global demand as of Q1. Realistically, Jordan, what might that rise to, perhaps in successive quarters?
Well, I think it'll just continue to increase in terms of central banks, the importance of their buying of physical gold. In terms of a number, we might look at it getting up towards 15% in the not too distant future. But the important thing to remember is that as it stands right now, China is saying they only have 1% of their forex reserves in physical bullion. If you were to think that they were to go to 15%, they'd have to buy thousands and thousands of tonnes.
Jordan, in your job, you're kind of helping to advise clients, and a lot of them SMSF investors, in terms of where gold might fit into portfolios. How does the Australian dollar at 95.5 cents start to affect the equation of how people should be thinking about that investment decision?
Yeah, look, I think the relative weakness of the Australian dollar in the last couple of weeks has really brought into light the additional opportunity for Australian dollar gold investors. Over the last 10 years, they haven't got quite as good a return out of gold as their US counterparts have. But as the Aussie dollar starts to slide, then there's a potential added bang for your buck for an SMSF trustee buying some physical gold.
What do you do approaching non-farms? Because this is a regular bit of data on the docket. Strategically, how do you advise investors, in the lead up to that?
Well, obviously, that's a sort of frequent data point that comes out, and if the numbers are above expectations, the market will interpret that as the economy's going well. So you might see the gold price fall off a little bit. But I think if you're taking that long-term view, Carson, the numbers aren't really showing a sign of real recovery when you factor in the debt and the money printing that's going on.
Lower for longer. We will talk to you soon. Thank you so much.
Cheers, Carson.
Jordan Eliseo there from ABC Bullion. Let's tell you about capture.